And let's say we drum up a couple deals for you, and we ended up bullet pointing them to an executive summary and getting them to you. We're not talking just about hard money, but hard money could be at play. If we want to get in quickly to tie up the deal, we could do that as well. But what about the private money as far as how quickly do they perform, and what is some of the deals they're actually looking for? I mean, what are they hot on right now that you see?
Ooh, well, yeah. What are you saying? Yeah,
typically $1 million is the minimum with a lot of these private hard money lenders. There is some lenders that are doing $250,000 to $500,000. They're far in between. Now, they'll do second loans too, which is very hard in this market. But if you have a particular project like a commercial property and you want to add on it, or if it's fully occupied, because the key component here is when you buy a commercial property, make sure that it's fully occupied, it's generating net operating income. Mm-hmm. That's what they're looking at. And if it doesn't cash flow, they're not going to lend. They don't care. I don't care if your FICO score is 550, 800, doesn't matter, because they want to make sure that they can lend against it and you can make the monthly payments, and that cash flow coming in can debt service the loan. So hard money lenders still look at that, just like commercial lenders do, but they're more lenient in terms of, they don't care about your credit. They don't care. As long as you have a couple, at least 3-6 months reserves in a bank, they'll lend against it, and they'll close in 10 to 14 days. That's the key right there. If you have excellent credit, then you can go to commercial route at 65, 70%. There is some commercial lenders out there. But the type of deals they're looking for is commercial projects. They're not going to do land. They're not going to do development in this market right now. And if they are, it's going to be about 30%, 35% LTV. That means that you have to come in, if you're purchasing land and it's entitled, you have to come in with 60, 65% down. Land is really tough, even if it's entitled. I don't know if you guys have been driving around in LA, you'll see a lot of projects uncompleted. Mm-hmm. You see a lot because the construction loans are not, they're not lending right now, and they have to go the hard money route as well. So, commercial, apartment buildings, good cash flow. They're not touching residential. If it's 90% completed, though, and if it's in a good city, good location, they'll lend against.
Okay, one quick thing, Jerry, because you mentioned something, and I want to make sure we're talking about the same thing here. I don't know if you guys caught it, but I definitely did. You had mentioned that they want skin as far as skin in deals or cash flow, and I understand that. What we're buying is properties that are. You want to elaborate on that real quick?
Yeah, well, because you can structure a deal like if I'm selling a property to you and I'm doing 10, 15% seller carryback, then you would only have to come in with 10, 15% down.
Perfect. So what I wanted to just elaborate on is if we got the right amount of seller financing, then that's the relief. Now, with that said, how much skin do you want to see in the game from a hard money lending standpoint?
Well, hard money lenders right now, they're dropping the LTV, loan to value, to about 60%, 65, 60%. 60% is the comfort zone right now for a lot of hard money lenders. So that means 40% down if you want to purchase a property for $5 or $10 million. Meaning that you would have to come in with, $400,000.
Okay, now question, what about
$4 million.
What's that?
$4 million, if you're doing a $10 million transaction.
Right, $4 million, okay. Yeah. Now, what if we had seller financing on the whole project? Would you relieve that, or would you still want skin?
No, you have to have some commitment from the borrower.
Okay.
The principal has to come in with something.
Right. So what he's saying is that you still need skin in the game. Now, what we can do is we can drive that skin in from private money, and that's your skin that you put into the game. Now, he's blowing it out on a pretty big number at $10 million, saying we have to put in $4 million. But remember, this is something that's lacking cash flow, or is this something with cash flow included?
With cash flow.
With cash flow.
Yeah.
So now, the way I look at it is this, guys. When we get seller financing, it basically eliminates the process of having to deal with hard money if you get seller financing. Students out there are getting 120% financing with a combination of financing and cash back at closing. There's different ways you can do it, but the hard money resource is always there. The money will always be there, and I don't think there's any shortage of it as long as the deal makes sense for you guys.
Yeah, and let me add, the hard money lenders, their business model is to lend. They want to make that 10, 13% interest only, and they want to charge those points. That's how they make money. If they're doing 10 or 20 deals a month, they're making a lot of money. So they're willing to lend if the deal makes sense.
Got it. Okay. We're going to open it up for quick questions, if you don't mind. Got about 4 minutes, so we can open it up for quick questions. Got one question over here. She said the LTV is based on the purchase price or the LTV, appraised value, or whatever's less.
Appraised value.
Appraised. The appraised value. Okay? And is that's the as-is appraised value or future looking?
As is. Well, you know what they're going to do right now? They're going to order 2 appraisals in this market. I mean, if you have an appraisal done, they're going to get a third-party appraisal because
biased opinion, right?
Yeah, so they're going to do that.
Okay. Yeah, that's what we're going to talk about when we get into appraisals. That's why I said don't rush out and get an MAI right out of the gate.
Let the lender do it, yeah.
Let the lender do it because the lender's going to get one anyway.
Right.
Follow what I'm saying? That's why what we do is we do our pre-contract due diligence and then we back it up when financing comes in. Do you have any other questions for Jerry or for Derek? Go ahead.
Jerry, you mentioned credit. If you're going with commercial loan, are you talking about business credit?
No, personal credit. Yeah.
Yeah, she asked about...
And good FICO scores. You got to have a minimum 680 and above.
I got to repeat the question because it's not on the mic. She said, again, you're asking, is it personal credit when we're talking about credit for hard money on commercial loans, or is it business credit? And your answer was?
Personal.
Personal. Okay. And don't worry about that because we can bring in a credit partner, guys. The slice of the pie in commercial is huge. And I have credit partners that's all they do is personally sign. And again, it's sometimes just... they want to see your willingness of making it happen. Okay? We had another question real quick. Go ahead.
Yes. Does the hard money lender have any consideration for the future value of the project as well?
No. They here and now. Yeah, as is here and now. The fair market value.
The question is there any consideration for hard money on the future value, or is it just as is?
No. It's
just as is.
Correct.
It's just as is. Okay, one more question in the back. Go ahead.
Do you have to have first position on the loan?
You have to have first position on the loan.
In most cases, yes, but there are some hard money lenders doing second loans for under $500,000. I have 2 companies that I work with, but they won't go anything over $500,000, and they want to make sure that with the second being in the